From AAAFx, this is Chris Lewis taking a look at the upcoming week of April 8th. So the first thing I do in these weekly preview videos is take a look at the potential issues out there, potential economic announcements. And you can see that as I look at the economic calendar, there isn't much that traders will be paying attention to on Monday. You can say the same thing for Tuesday. And generally what this means is risk assets have a proclivity to rise because there's nothing to worry about per se. There's nothing scientific about it. It's just that people aren't covering positions getting ahead of like the jobs number, for example. So Monday, the closest thing we have to anything important would be Jordan speaking out of the Swiss National Bank, but they've cut recently, so there's no reason to think that he's going to rock the boat. That unemployment rate out of Switzerland also comes out. The only way that this changes anything is if it comes in extraordinarily hot for some reason. So the Tuesday session, very much the same thing. And again, I think you probably have a proclivity for the risk assets, and I'm thinking stock markets in general, to rise. Generally speaking, that's how this will behave because there is not much to worry about. Wednesday is a big day, though. Wednesday, we have a whole plethora of things coming out that could move the market. You get the official cash rate and the rate statement coming out of New Zealand, while typically a very localized number for the New Zealand dollar. The reality is, if they shock the market, it can cause a lot of repositioning in general. The question here is, are they ready to cut? The market does not expect that. But regardless, if that were to happen, then people would start reassessing a lot of things, I think. This is more or less going to move the New Zealand dollar, would be my guess. A little later in the day, we get consumer price index numbers coming out of America. That's important. So do pay attention to that. The hotter that is, the worse it's going to be for markets and risk appetite, because everybody is waiting on the Federal Reserve to do something to loosen monetary policy. The question is, when will they do it? And how many times between now and the end of the year? Shortly after that, we get the Bank of Canada interest rate decision. The statement is probably what we're watching more than anything else, just to see if Ottawa sounds like it is getting a bit concerned and that it could cut rates. This will be a big mover of the Canadian dollar, but it could be a big mover of the TSX and possibly overall markets if they shock. Again, it's one of these situations like the New Zealand dollar. It's pretty localized, but if the central bank does something completely unexpected, it can have a ripple effect. They also have a press conference, so it'll be interesting to see how the Canadians view the global economy. People will pay attention to that. A few hours later, we get the FOMC meeting minutes from the last meeting. It can move the market. I don't think it does this time. Thursday is a big day. We get the ECB, and we will have to see whether or not they're willing to cut rates yet. It appears that they are expected to hold. However, that statement and then later the press conference will be parsed. And right in the middle of that, we get PPI numbers and unemployment claims coming out of America. So the middle of Thursday is probably going to be a bit of a train wreck as far as volatility is concerned. Make sure that you are very cautious that time of day. Myself, I probably will make sure I'm not involved in anything that could be directly affected, at least. Later on, the 30-year bond auction can be important. The only reason I think traders are watching this is because the U.S. is adding $1 trillion of debt every 90 days. And sooner or later, the markets are going to call the U.S. out for this. We'll have to see when that is. Friday, we have GDP coming out of the United Kingdom. That's obviously a British number. And then preliminary University of Michigan consumer sentiment could move the stock market. We'll have to wait and see in America. Really, I think what you've got is a situation where once you get through Wednesday and then Thursday, the market's probably going to be very exhausted on Friday. So it's almost like, if you can think of a bell curve, right in the middle of the week, things go crazy. So with that, let's take a look at some charts. You'll notice that the NASDAQ 100 plunged during the previous week, but we do continue to find support right around 17,775. I think that continues to be the case. And I look at short-term pullbacks as buying opportunities. That's especially true after we saw the market recover quite nicely after the jobs number. Euro continues to just kind of bounce around in this range. The ECB monetary policy statement and interest rate decision obviously can have a major influence on this, but quite frankly, I don't know that it changes the situation much. It can, but I think we're more or less stuck in this range because both central banks should be cutting between now and the end of the year. And if that's going to be the case, you really have a hard time saying, I want to own this currency over the other one. The one thing that could change, though, if we get a sudden risk-off move around the world, that could drive this pair lower. But right now, it's very neutral. The S&P 500 recovered quite nicely to break back above the 5,200 level during the trading session after the jobs number wasn't anywhere near as scary as people thought it would be. This is a market that's very bullish, and it shows the resiliency of the longer-term uptrend by the way we behaved on Friday. Is it a market you want to chase with both fists? Probably not, but it's certainly a market you can't short. You have to look at these short-term pullbacks like we saw over the course of a couple of days as buying opportunities. Things are going to be very interesting next week when it comes to the gold market. Gold markets have gone absolutely stratospheric and ballistic this week, and they obviously are very bullish, but at this point, I think you have to be very reckless to come in and buy it here. You desperately need some type of pullback in order to get involved, or you can just wave and say goodbye, because you can't chase it like this. It's a great way to lose a lot of money if you are not cautious, but do be aware of the fact that sooner or later a lot of profit taking will happen, and once that does, that's your opportunity. Perhaps one of the central bank actions during the week, maybe the European Central Bank, might cause a bit of a run lower. If it does, that might be your signal. Australian dollar, much like the European currency, just kind of sideways. I don't see us breaking out of this range, but if we break above the 0.6650 level on a daily close, it is possible that we could go looking to the 0.6850 level. Ultimately, I think we're kind of just trying to sort things out. Bitcoin has had a very volatile week. However, it's worth noting that we've recovered nicely, and this looks like a market that's just simply going to churn. Eventually, I do think that the upward momentum continues, but let's be honest here. 92% in just a short amount of time is not a move that's sustainable. And that's basically what you're seeing here. You're seeing a market that is comfortable, but it's just not momentum driven at the moment. US dollar against the Japanese yen, we continue to pound against the 152 yen level. This is an area that if and when it breaks, look out. It's going to rocket. I suspect at this point, the Bank of Japan is intervening quietly in the market under the surface, trying to keep the yen somewhat viable, but with zero interest rates and a ton of debt, it's only a matter of time before the yen gets smoked and we go much higher. Short-term pullbacks continue to be buying opportunities, with the 150 yen level underneath being a very likely floor. Oil continues to show massive strength. This is the US oil chart, or WTI, and it's easy to see that we have broken above a crucial resistance barrier in the form of $85, but it's also worth noting that there are multiple reasons for this market to go higher. One of the most obvious ones will be the geopolitical tensions in the Middle East that could threaten oil production. The market is likely to eventually go looking to the $90 level, so I like the idea of buying pullbacks. Brent market's very much the same thing. We've broken above $90. I think we get to 95 given enough time. Short-term pullbacks continue to be nice opportunities for those who are patient enough to take advantage of it. And keep in mind, we have a supply issue. We have basically an empty strategic petroleum reserve in the United States. We're down to 17 days. But the U.S. has announced they aren't going to refill the SPR because prices are too high. Well, that's what happens when you flood the market with oil to buy votes. That's essentially what happened. So, silver is a market that I would be somewhat concerned about getting involved to the upside. Now, having said that, it doesn't mean that I want to short the market. It's just that we have gotten to the point where I do believe sooner or later there is going to be a vicious snapback. It is worth noting that the next major resistance area isn't until we get to the $28.50 level, but notoriously manipulated is this market. The paper silver market, there's been multiple instances of JP Morgan getting busted for manipulating it. So generally what happens is they spoof the market, they flood the market, they manipulate the price, they pay the few $100 million in fines for the multi-billion-dollar gains. It's probably only a matter of time before something like that happens again. If you're looking to play the precious metal trade, gold is the way to do it. It's not silver. The silver isn't even a precious metal anymore. The way it trades more or less like an industrial one. That being said, if we break above 28.50, we could challenge 30. I think in the short term, 26 offers support. If we break down below 26, that would be a very bad sign. The DAX had a pretty rough week, but worth noting that the daily candlestick on Friday is a hammer, so it looks like we're at least trying to fight back. Obviously, the trend's up. Got zero interest in trying to short this market. With the ECB meeting this week, it might be quiet for a few days. Would make a certain amount of sense. But basically, you know, when you think ECB and the European Union, you're thinking Germany. And this, of course, is the German index. British pound Swiss franc did not clear the 1.15 level. This is an area that I think is vital. The Swiss would love to see this market break above there, but I think in the short term we get a little bit of a pullback first before we build up enough momentum to make that happen. If you think about it, it's been a pretty big move, up about 6% in a couple of months. That's kind of a big move in this pair, especially considering its counter trend. So looking for value on dips. The euro against the pound, 0.86 will tell the story. If we can get above there, then it's likely that this market could go to 0.8750. Underneath, we have a massive amount of support to be found at the 0.85 level. Euro yen has been all over the place during the week. Notice Friday looks more like a hammer, so I do think that we are going to continue to see upward pressure. At this point, I would have no interest in shorting anything denominated in yen because, quite frankly, I don't want to pay the swap. Ethereum, weekly candlestick, pretty rough looking. Friday candlestick suddenly shows signs of life. So I think we're going to enter a bit of a grind between, and I'm going to use a big area here, 3,000 and 4,000. Dips continue to get bought into, but unfortunately, it's a 25% range, and that's just the way it's going to be. Dollar poked higher against the Canadian dollar, but could not clear the 1.36 level, at least on the close, so we'll see. If we take out the top of this candlestick, it opens up a move to 1.3850. Otherwise, we just continue the sideways grind that this pair is notorious for to begin with. Swiss franc against the Japanese yen. So this is a pair I watch a lot, not even to trade, but to get an idea of who I want to fund my carry trades with. And right now, it looks like the Japanese yen is a clear winner. Yes, the Swiss franc has fallen a bit over the last month or so, but when you look at it, one thing that you can see at 167 yen is a lot of support. And for 2 weeks in a row, we have formed a hammer. I think this shows that we are more likely than not going to consolidate. I don't want to buy the franc against anything except for maybe the yen, but I don't want to buy the franc in general. But what I do look at this chart is for that carry trade setup. So what this tells me is I want to remain short of the Japanese yen. In other words, buying Kiwi yen, pound yen, Aussie yen, dollar yen, etc. Do I want to buy dollar Swiss in this scenario? Probably not, although I think in longer term it works. But the Swiss related pairs look like they are going to favor the Swiss franc, at least in the short term. Over here in the CAC 40 in Paris, we have fallen pretty hard. But notice Friday, we got a hammer, just like we did in Germany. I think we're going to enter a consolidation phase. Euro yen continues to look strong. Friday's candlestick was a return to an attempt at bullish pressure. I think a little bit of volatility here. Basically, most of the yen pairs are going to come down to the 152 yen level in the dollar yen pair. If that gets broken, yen is going to get smoked everywhere. So regardless of what you're trading, keep an eye on that. Dollar did give up its early gains against the Mexican peso. This is a pure interest rate play. That's not a big surprise. You do, however, have to keep an eye on the 16 pesos level underneath. That is a massive level going back multiple years as support. So we'll see. I think you're continuing to fade rallies. The dollar gave up quite a bit against the NOK, the Norwegian Krone, as the 11 Norwegian Krone level has held rather firmly. So I think at this point, what I want to see is what happens. I'm going to put 10 because it is sloppy, but it certainly looks like we are trying to form this type of range. I mean, you can make an argument down here and up here and blah, 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 and yada, yada, yada. I suppose you could, honestly, you could probably do something like this. So basically what you have is this is your range and these are the outer areas. Think of it like Bollinger Bands. A little bit of a short-term pullback expected. I do expect the dollar to do okay, though. I would be surprised to see us break the 50-week EMA, at least in the short term. Litecoin gave back its gains for the week, but continues to find buyers. I think it's only a matter of time before we break this 115 level and continue to go higher. That's just going to be true with most crypto. Litecoin, of course, typically follows Bitcoin, as they're basically essentially the same thing. So Australian dollar, Swiss franc. Now, I think we are eventually going to see a breakout and a move above the weekly candlestick at 59.90. Let's just call it 0.60. This is a very bullish sign in this pair. We didn't quite do that this week, and you can see the Thursday candlestick was a big reason why. But notice Friday, we're just kind of hanging around. What that tells me is, even though there was a lot of selling pressure there, nobody's willing to short this pair. So that's why I think the time is ripe for a longer-term investment. Keep that in mind. It's not something that's going to be easy, but we did break the back of a shooting star from the previous week and something along the lines of a shooting star from the week before. So pressure is building. We'll see, but a break above 0.6, man, is that going to be a good sign that this pair goes higher. So every week I do this weekly rundown for AAAFx. So make sure you subscribe, give us a thumbs up, and I'll catch you daily with analysis as well here on the AAAFx YouTube channel.